Good morning, welcome to the Fit to Flourish podcast. Let's talk wellness, finance, and growth.
What's up, guys? Mr. Fit to Flourish, and today I wanted to talk about what I'm looking at in swing trades when I'm choosing options for swing trading. All right, let's get right into it. Let me show the screen, even though I'm not really going to use the screen that much. But we can talk a little bit about we took an Apple trade recently. So let's post that bad boy up. Where did we take that Apple trade? I have a video on why we took the Apple trade, but not important right now. But what stocks, what strikes are we looking for, and how do we choose the strikes and the expiration date? All right, when you're choosing a swing trade, when it comes to options trading, you want to make sure that the theta is not crazy. So theta is basically the time decay. So for every day you hold that contract, the option price can go down, which can make you lose money. Okay. So typically you want to go at least 3 weeks out minimum when you're choosing a swing. Okay. So swings, and depending on how long you want to hold the swing. So typically my swings are 3 to 4 days maximum. A lot of the time I'll get in right at the breakout. So it's usually a 2 to 3 day hold on my swings, but my swings are typically 3 to 4 days max. But really, what are the 5 things that I'm looking for? And I wrote these things down, and someone had a question about this a long time ago. They said, hey, like, what did they say? They said, how much weight, percent-wise, does open interest and volume play in the strike price you're selecting when looking at contracts? So if I don't know the stock, the open interest is very important. Open interest is the amount of people holding that specific contract, strike and expiration overnight. So if you see a big number for open interest, that's pretty good for swing trades sometimes, because it shows you there's a lot of people that are holding this option contract. All right, so it's important. It's super duper important if it's a stock you don't know. But if it's a stock that is highly traded, like Apple or Amazon, Google, like those stocks, the open interest being ridiculously big is not really that important. We know these stocks are highly traded, and if it's going to be big, so the open interests are typically going to be pretty big, especially if you're choosing what I'm going to tell you to choose. And if the play is actually an in-play stock, like if it's actually, okay, we're going to break out here, we're holding this level. Okay, so some of these strikes are going to be pretty important. Okay. But what's important when choosing strikes? So again, like I said, my strikes are a 3 to 4 day max. I'll talk about how to choose longer expirations as well, but you just use these 5 steps. Okay. So first, I want to determine the direction. So the number one thing is, all right, the direction of the play. So overall, do I think that from this area, do I think that the stock is going to be moving up, or do I think it's going to be moving down? Okay, do I think I need to get call options? And again, I'm only talking about going long calls and going long puts. So buying calls versus puts. Buying calls means you're betting that the stock is going up. Buying puts means you're betting the stock is going down. So call versus puts. Alrighty, so determine the direction of the play. All right, so in this case, I'm like, oh damn, we're consolidating here. We're picking up some momentum. So I think that this is going to go up. 920 crossover. I'm like, yeah, this is going up. So I'm going to get calls. That's the first thing that I do. And then I'm like, all right, well, how long do I want to hold this? And where do I think this can go? Well, so that's the second thing to determine is the average daily range, or the average move that my stock makes every day. So the ADR. So the next thing I need to determine is what's the ADR? So if you look at like the ADR for Apple, you can do calculation tools or whatever. But if you just look at like these bars, you could see like, oh, okay, Apple moves about $3 to $4 on a day-to-day basis. So at the $200 level, I said, well, I think it's going to take about 3 days for us to get from 200, 3 to 4 days to get to about 212. So I marked it orange, and I was like, all right, 3 to 4 days, I'm going to hold the swing. So from 200 to 212, it's going to take about 3 to 4 days, okay, on this breakout. All right, because we move on an average $3 to $4 a day. All right, so that's pretty easy. So that's how you need to think about your stock. So if your stock moves $2 a day, then think like, okay, what's my target? My target's probably going to be this area. Okay, but remember, your strike price does not need to be the level that you think is going to hit. It could be a little bit further out. Okay, it could be a little bit further out. So then the next thing is, I need to understand not only the average daily range, but how fast can we get there? Okay, so like I said, I think it's going to take 3 to 4 days because every day we move about $3. Okay, how fast can we get there? And I don't want to be holding the option contract too long, especially if I'm getting a contract that's only 3 weeks out. Every day that I hold that contract is going to lose value automatically because of theta. Okay, the time decay. Options are wasting assets. And if I think it's going to take a longer time to get to 212, then what do I need to do? Just push out my expiration date a little bit further out, which is going to kind of hurt you in terms of like your delta, like how much you can gain for every dollar move. But that's okay. It's safer because your theta is not going to go down. You're not going to lose as much value on your contract. So that's okay to sacrifice some gains, just a little bit of gains for the safety of not getting decreased value. The next thing for swings is that it's better to get the monthly expo option. So what is the monthly expo? Well, it's the third Friday of the month, and this is where the most volume and the most open interest is going to be found is on that monthly expiration, which is why we don't really need to focus on like, oh, like what's the open interest like, but you can use that open interest to kind of determine where, because that's where big money is putting their money, and that's where most people are putting their money. You can use that open interest to kind of determine what strike you want to get. But really, the monthly expiration options should have a ton of volume. Okay. All right. And then last but not least, the thing that I look at for choosing an option strike is going to be, is my option contract a psychological level? Okay. Now, what does that mean? So basically what that means is, all right, psychological levels are 5s and 10s places. So if we're at this $200 level and I'm going to choose an option, the option that I chose here was on the initial move was 210. And why did I choose 210? Because 10 again is a tens place. So I would want to choose strikes of 210, 215, or 220. Okay, with 210 and 220 probably going to be having the highest open interest. So the most people trading at those strikes, 210 and 220, because they're like even tens place numbers. The fives places are good as well. But if you look at like the 212.50s or the 217.50s, like it's not going to be that much volume, and it's not going to be as highly traded. So you want to stick to those fives and tens places when you are trading strike prices. Those are what's called psychological levels. Those are where the most traders are trading at, and big money is trading at as well. So if there's like strikes like 211, 212, 213, if you ever see strikes like that on different equities, just stay away from those and go for 210, 215, 220, 225, 230. Okay, those are psychological levels. So fives and tens places. All right. So yeah, how do I choose these, especially for shorter swings? So like I said, my swings are usually 3 to 4 days maximum. And I'm getting them on breakouts and market structure shifts. So we had a 920 crossover here. We had the volume RSI crossing above 50. What else did we have? We held this key level, and we were breaking out from that key level, and it's a psychological level at 200. It was the end of the second quarter. We had a lot of option flow into Apple, so that's why we picked it up. And I said, hey, in 3 to 4 days, I think we can get to 212. So the first day I took 210 contracts. We ripped there pretty quick. So the second day we held this 206 level. I took off at 150% gain. It was pretty massive. So I was like, all right, I'm taking my money. But it then ended up going like 270, 300%. But I was like, whatever. I'll see how we hold for the day. And we actually pulled back to that 206 level. And I was like, oh, we're holding. So then I re-entered. Okay. I re-entered the same date. But then I chose 220 the second time. 220 expiration. Because I was like, all right, in 3 to 4 more days, we're probably going to be moving near 215. We're probably not going to get to 220 exactly, but we'll be moving in that direction. So I'm going to get calls and we'll make quite a bit of money. So then the next day went to 300%. I was like, bro, this is crazy. So yeah, that's how we chose them. But if you want to, let's talk about this. So right now, Apple is on this kind of tear. It's on a breakout. And I personally know that Apple can get back to this 250 level. Okay. We think that it can get back up here to this 250 level. And I think that's where it is headed. Now, it's not going to be a clean, straight up move like, oh, it just goes to infinity. It's going to look something like, oh, okay, we go sideways. And then we're going to come up to a volume node. We're going to hit 224. And we're going to come back down to 216 a couple days. And then we're going to move back up. And then at 224, we're probably going to go sideways. And then we're going to start making this move back up to 232. And then we're going to go down a little bit. But then we're going to get more news. And we're going to come all the way up to about 251. All right. So it's going to take some time. So how long? Well, it might really take, right now we're in July, it might take till about September to get to 250. All right. It might take till September. So what am I going to do? What am I going to do, and what option contracts can I choose? Okay. Now I'm not going to choose strikes that are way, way too far out, strike prices, because it won't gain, like the delta is going to be too small. And delta kind of explains the percent chance that your option will expire in the money. It also tells you how many dollars your contract will gain for every dollar move that the stock goes up. So what am I going to choose? So I'm looking at this. I'm like, all right, so we're at 212 right now. I think we could get to like 230 realistically in maybe a month or two. So I would choose a 3 month till expiration. So something like it's July currently. So I would probably choose, let's see, I can even choose August, like the monthly expiration for August, because I think we can get to about 220, 230 by then. So I can take an August contract. I can take, let's see, September, October. I can even do an October contract. And I would choose around 220 to 230 because I know that we're already at 212. It's going to take some time. We're probably moving around here, but that 2 to 3 months out will give me enough time to get either 230 or 220 and even past it. I don't want to go too far out, even though I do think we can get to 250. I know realistically it's going to be pretty easy to get to this 220 and then 230 level. Okay, and then we'll get in this money and make money pretty good. If you do want to target this 250 strike price, you'll probably want to do some lead contracts. That's a little, like I said, that's a little bit too far out when it comes to contracts. All right. But anyways, that's kind of how you want to be thinking when you're doing swing trades. And then it all kind of depends on how long you want to hold the contract, the average daily range of the stock, how fast you think it's going to get there. And then is your strike price a psychological level? So hopefully this helps choosing your option contracts. It's your boy, Mr. Fit to Flourish, and I'm out of here. What's up, guys? It's your boy, Mr. Fit to Flourish. If you like this content when it comes to trading or fitness or just growing in person, feel free to click any of the links in the bio. So we have a link for our Discord for trading, and that trading Discord, we have a free 3-day trial that's going on. But if you're not someone who really likes trading, or if you want to grow as a person in terms of mindset, your finance, your health, wealth, spiritual fitness, and you like that content, we do have a group specifically tailored to helping men grow. That Discord link is in the bio. We have a free section, and then we have a paid section where we go more in detail and do one-on-ones. If you want to do one-on-ones, again, those links have all the things that you want to see. If you want to see more of this content, you like this content, keep liking, subscribing, and doing all that YouTube-y stuff. Check out the Discords down in the links below.